Hi everyone. I have just been vacationing in Canada for the past few weeks, so haven't been posting much on either YouTube or Twitter. But this video of Sam Seder came to my attention on a libertarian policy in Alberta, Canada from a Canadian caller. While in Canada, I made a video response to this on my phone, but the audio quality was horrible, so I unlisted it, especially after valid criticism from both aisles of the political spectrum. So I'm extremely sorry about that. So here's a redo. Anyway, let's hear what Sam says.
Okay. Well, in the past couple weeks, I've been yelling at my friends a lot, a couple weeks ago more, because there's all these governments or all these people talking about the need for a gas tax holiday, right? With the rising prices of gas, conservative people are saying, oh, well, the government should have a holiday on the gas tax. We should cut back on whatever money the government is making from gas to ease the burden on the consumer. So the Albertan government did that. They did a gas tax holiday. They cut back their 13-cent per liter gas tax. And now, well, a couple weeks ago, the conservative former leader of Alberta, he's since stepped down, is calling in the Competition Bureau of Canada, our FTC, to investigate gas companies because even though the government got rid of the gas tax, ostensibly lowering the price by 13 cents per liter,
they raised
Albertans didn't see an actual reduction in the gas price.
So what he's talking about is the Premier of Alberta concerned about price fixing after taking away the gas tax of 13 cents per litre, aka the gas tax holiday. This proposal was in response to high gas prices, and while there was a benefit for Albertans initially, relative to even other Canadian provinces, gas prices have risen again for Alberta. Hence, Albertans appear to no longer benefit from the tax cut. As a consequence, the Premier Jason Kenney has gone to the Competition Bureau since he believes there is a possibility of price collusion, which is illegal, and is trying to find out how to interfere under the Consumer Protection Act. However, what Sam's Canadian caller doesn't tell you about is that gas prices rise and fall for a multitude of factors that doesn't have to do with price gouging, monopoly power, or so-called corporate greed. For instance, according to economist Trevor Tombe, the tax reduction in diesel is still being passed to consumers as a benefit, so it is unlikely to be a lack of competition or greed.
That's not possible because I am told by libertarian after libertarian there is a one-to-one relationship between taxation and the price of things. I just had a guy, Larry Sharp, on for ages who just said that if you get rid of the taxes and regulations, prices will go down.
Yeah, it's a real shocker, isn't it?
Yeah, I'm just shocked because oil companies really care about the communities they serve, and it doesn't sound like the behavior of this, so I think you must be wrong.
But yeah, I just thought it was really funny. This conservative leader, going on about, the gas tax holiday, it'll save the consumers so much money. And then, exactly like I predicted a couple months ago when people started floating it around, obviously the gas companies are just going to raise the price. Obviously that's what's going to happen. Well, I guess it wasn't that obvious.
Well, it did go down temporarily for Alberta, as I mentioned before, and diesel still fell, so there does still seem to be a decent relation between tax and price. Anyway, the cause for why gas prices are still high is unknown for now, but Tombe has theorized that a potentially plausible problem is a shortage of ethanol, which is blended with gasoline. Such a shortage raises the cost of ethanol, thus raising business costs for gas stations, and these cost prices are passed on to the consumer. There are a multitude of other possible factors that go into gas prices, as the sector is an extremely volatile market. Not to mention that it's pretty competitive, as drivers have alternatives, and retail markets know this, so will price accordingly. Other factors could be Alberta-specific cost increases, or interest rate hikes. If you think Seder has horrible takes, but see very few people criticizing him, follow a new subreddit I created called Sam Seder Fails, where we critique his arguments, promote response videos, and other material related to him. Feel free to join.
I heard on Ralph Nader's podcast, they were talking about like how if the Fed just bought the oil companies, but they were talking about the windfall profits tax.
Yeah.
And if we just did that, that would be like over $150 to every American.
I was wondering when I would get to use this study in an American context. A windfall tax is a tax, obviously, that is placed on short-term exorbitant profits that a company is not responsible for, such as a war, aka Ukraine and Russian oil. And frankly, a windfall tax is a horrible idea, especially on oil and in America. Why? Because the oil sector is subject to long-term increases and decreases in prices, so it's pretty volatile. Hence, they have to deal with long periods of booms and declines. To account for this, these companies save the large profits during the boom years to finance themselves during times of relative economic decline. A windfall tax prevents this necessary financing, leading to a fall in investment. In 1980, the US enacted a windfall tax that was projected to raise $279 billion, but instead generated $79 billion in gross tax revenues. That is less than 30% of what was actually expected. And why is this? Because the windfall profits under corporate income taxation were deductible. So from tax deductions alone, potential revenues were cut by half. Also, the 1980s windfall tax lowered domestic oil production by between 3 and 6%, gutting further potential revenues. And to make matters worse, it increased US oil imports by 8 to 16%, which hurts energy security. I don't have to tell you about how problematic it is to rely on foreign dictators for oil. Now, on the $150 giveaway, I couldn't find that specific number, but I found the windfall profits tax proposal by Ro Khanna that gives a $300 quarterly check for those earning up to $150,000. Now, this plan is different from the 1981, in that it not only taxes domestically produced oil, but that it is also directly tied to profits than prices. There has been an argument that a plan like Ro Khanna's would create less economic distortion than the 1980s one, according to a Congressional Research Service study. This plan is the income tax variant of a windfall tax. The income windfall tax would raise sizable tax revenues and wouldn't lower domestic production. But when you go into the study, you find out it has a smaller revenue potential than the 1980s excise one due to a smaller tax base. Besides, there appears to be no move to remove the tax deductions in Ro Khanna's plan, so once again it would raise a small fraction, which would be very little money for those $150 checks. And even if you remove those deductions, chances are many of those companies will leave the US, especially since you are going to tax their windfall profits, on top of their profits that already had a corporate tax. So that is basically double taxation. So to Sam's buddy, is a windfall tax really worth it? Still, I'm again pretty sorry for my audio quality, but the software on my phone wasn't great, and I wanted to upload the video as soon as possible, which was a mistake on my end. Overall, there are other progressives that I plan on responding to, ranging from Kyle Kulinski and the Young Turks to the Gravel Institute, and you can check out my previous responses to other lefties like Adam Conover, Hunter Avallone, and Richard Wolff. Anyways, I hope you enjoyed this video. If you did, please give a like and comment, as it really helps my video in the YouTube algorithm, and if you like economics and political commentary, consider subscribing. Maybe follow me on my Twitter, and see you later.